Hey, good afternoon, traders. This is Trader Tim from eMoneyMind.com. Today is July 8th, Friday, 2016. I wanted to start off with a weekly chart in today's trade recap slash market analysis video. And you can see that we are ever so close to those 2134 highs on the ES. This 3-year chart showing the weekly kind of shows that even with this recent pullback, even though it was kind of a widening formation that we have here, where we have a trend line going down, trend line going up, in a widening formation, which typically can lead to more of a reversal, the markets are pushing higher. And if I go down to a daily chart, zoom in a little bit, we can see that today's highs so far, markets haven't quite closed yet this afternoon, but we have broken the previous swing high, which is a pretty important level. Now I've got 24 hours worth of data on my chart. Let me go put a 9-month daily. And so here's the 24 hours worth of data, and it's been kind of a tough week to trade. Not a whole lot of setups coming back to the 50, not a whole lot of high-low bar, low-high bar setups. And if I go to if I turn off trading hours only, or if I rather turn on trading hours only, so I get rid of the overnight session, you can see that there's quite a few gaps here. Pretty much almost every day we've had some sort of gap off of the open at some big gaps down below on the way down and on the way up. So this can make for some interesting trading conditions. We didn't really get a 50% retracement on the daily chart on this move up, which, after a sharp move down, to have a sharp move up is pretty common, kind of this V reversal. So there's not always great opportunities on a daily level, but we've had some decent intraday trades, especially last week, closing out the week. If we go to a 5-minute chart and look at some of this week's trades, again, trading hours only is on, so you can see that the gap up and the gaps down from earlier in the week. Monday being a holiday, it kind of threw off the week a little bit in that Tuesday's trading was pretty quiet. There wasn't a whole lot going on. You can see we just pretty much moved sideways most of the day, closed right about the same spot that we opened. There wasn't a ton of opportunity in the live trading session that you can find over at emoneymind.com/VIP, where we trade on Tuesdays live. We were talking about how when you're stuck in between the first 30-minute range, that can be a pretty tedious, challenging part of the day or part of the trading environment to be in. So if I were to draw the first 30-minute range for, say, Tuesday, let's see. It would look something like this. And you can see how most of the day is comprised in that first 30-minute range. Well, on Wednesday, if I were to take the first 30-minute range, it would look more like this. And I'll just extend it to the right. 30 minutes is only about that much time, roughly, a little less than that. But you can see how we have broken out of the first 30-minute range right away. And so just the difference in these 2 days where we stay in the first 30-minute range for most of the day versus establishing a range and breaking out of it. Very different daily scenario. Same thing with Thursday. First 30-minute range was pretty tight up here, and then we broke out of it rather quickly and spent most of the day back down here where a lot of the trading from Wednesday occurred. And then today, once again, kind of a tighter first 30-minute range, and then you'll notice that we broke out right away and then thus leading to a trend day. So if we're going into the morning, like into the late morning and we're still just stuck in between the first 30-minute high and low on the day, that's a pretty good indication that we're going to be in more of a range-bound choppy scenario. So just by looking at the first 30 minutes, you can get a pretty good idea of what kind of day, what kind of trades you're likely to expect. And when we break out of the first 30 minutes right away, expecting more of a trending day with, trades that have a lot more momentum is a much higher scenario. So today being Friday, the gap up, especially kind of in the context that we're in, looking for a gap up and then getting long above the first 5-minute bar. And it was a little bit back and forth early on, even though, looking at it right now, it looks like we kind of went straight up. But there was a little bit of sideways consolidation, and it was a little bit hard to stay in the trade trailing every 5-minute low, 5-minute candles low. So even though we've been grinding higher today, I was not able to hang on like last week on, I believe it was Thursday, where we had an opportunity to get in and then trail to the close. Other than that, next week I will be looking for some continuation at highs. It would be nice to see a little bit of sideways pause where we could build another base, because that way when we get these sharp moves up, if we can build some sort of base, that way when we make the next move higher, we can pull back, and then that support, that resistance level could then act as support. We don't really have any 50% retracements currently that we're sitting in, except if we if we were to draw the full 50% retracement, we didn't come all the way halfway back. The markets rallied before that. But we are holding this guy here, and that has a target of 2175s. So for now, we'll use that just kind of as a ballpark figure just to give us some context. We were down at the 2000 level, and some sort of target or ballpark at the 2175 level, so about a 175 point move, and we're roughly closing in on 2/3 of the move. So as we approach 2175s, I wouldn't necessarily want to be looking at longs, but if we get any sort of pullback in here, or let's say we move sideways for a couple days, maybe we form a little bit of a triangle formation where we tighten a little bit, and maybe we have a couple of inside bars, then I'd be looking for some long setups to take us up to that 2175. And those could be, either on the daily chart, but more than likely on the smaller 5-minute or 512 tick chart to use that as an entry, because the volatility has been a little bit higher. The daily chart has been a little bit sporadic with some gaps that have made it a little bit challenging to get in and stay in to a trade. So that's what we'll be looking for next week. Don't feel bad if you missed out on some moves during the week. I mean, in the grand scheme of things, it's a pretty small move, just 1, 2, 3, 4 bars here. And now that we're breaking highs, we've got some real potential to have some phenomenal trading days, both to the upside and to the downside. So we'll be looking at that next week. Again, live trading Tuesday. eMoneyMind.com/VIP for more information there. If you have questions, shoot me an email, Tim, T-I-M, at eMoneyMind.com. I'd be happy to chat, and I hope you all have a great weekend. Thanks, and we'll talk to you next week.